What's going on, guys? Welcome into your Energy News Beat here on this gorgeous February 10th, 2021. On this Wednesday, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Denver, Colorado, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsBeat.com. Stuart Turley, how you doing today?
It's a beautiful day in the neighborhood, but this is cold.
Yeah, no, it's cold out there in Oklahoma. You can check out everything and a bag of chips on the show to my left there. But first, guys, just continue to subscribe to the world's greatest YouTube channel, Energy News Beat. We really appreciate all the support. Also, check us out online, www.energynewsbeat.com. If you just want a IV of news straight into your veins, it's the best place. Hit our one-click notifications. Again, we really appreciate all the support. Let's go ahead and look at top 9 numbers here. SPY was down 0.03 percentage point. NASDAQ down a quarter of a percentage point. And Dow Jones stayed pretty flat. You know, when we look at really what happened today, Jay Powell actually had a speech in the Economic Club of New York, and really what he said is we need to be patiently accommodative in terms of how we're going to roll back rates. So that's a bullish move. But he also came out and said unemployment is really at about 10%. Currently, unemployment's about 6.4 percentage point. But remember how unemployment is actually counted. It's only a number of people looking for work. If you have given up looking for work, maybe because for 99 weeks, you can get unemployment benefits. Why would you work? Some people are making more money right now. So that number can be a little skewed of the number of people actually looking for work versus the people who have actually given up looking for work. And so that's where you're talking about the discrepancy. And to hear Federal Reserve Chairman Powell come out and say that, not good. Russell 2000 did have some attraction in terms of some of our lower cap stocks. And again, that's just because we think stimulus is going to help. Here's the note from Scott Wren. He's a senior global market strategist for Wells Fargo Investment Institute. He says the markets are anticipating a large amount of stimulus being pumped into the economy. We do believe additional stimulus is needed to help the economy. Of course you do, Wells Fargo, and its customers to bridge the gap between now and then, and when the vaccines are more widely administered and the lockdowns are lifted. Also didn't help the markets that it looked like there's possible travel restrictions that are going to be brought down by the Biden administration. So again, the more lockdown we get, it's not going to be good for these prices, especially at these inflated levels. We'll be watching all of that closely. Let's just move over to the crude oil markets too. Unfortunately, we have our first loss, guys. It's been fun the past 10 days. Choo-choo! Oil's been on a roll. Today we get a little bit of a pullback, though, about 0.6 of a percentage point on the downside. Front month contract for WTI currently trading 58.32. Brent front month contract basically stayed flat, was only down 0.1 of a percentage point, currently trading 61.52. Back into the WTI curve, 55.01. I mean, you knew this was going to happen at some point. Fundamental data came out on the EIA side, and it actually looked good. We'll cover what happened on crude oil inventories here in a little bit. But just, from a fundamental standpoint, that 6.8 million barrel draw that we had from Cushing didn't quite do anything. So that kind of tells you, in my eyes, the steam of this bull run is out. If we're getting 6.8 million barrel drawn from crude oil, spoiler alert, that's what the draw was. That just, in my opinion, shows the steam on crude oil is just out of there. And so it'll be interesting to see what happens moving forward. Natural gas stocks drop tomorrow, but natural gas was up 2.4 percentage points today, up to about $2.90. So could we see $3 tomorrow? Probably, with a good draw number. Again, it's just going to be a really cold February. Stu said he's freezing out there in bear country. It's actually nice and warm here. It was cold this morning, though, had a little bit of a frost. So yeah, I mean, it's good for, if you're a natural gas trader, cold weather, here we come. They absolutely love it. On our security side, E&P continues to win the day, 2.29 percentage points for our XOP contract. That's currently trading up at 74.90. OIH, which is Oilfield Services, 183.58. That's 2.81 percentage points on the upside for all you Dogecoin traders out there. 7.2 cents right now. So just keep that in the back of your minds. Downside for oil and gas, couple big movers. Haldor down 5.6. Prime Energy down 6.8. American Resource Corporation down 7. High Point Resources down 8.4. And Sanchez Midstream down 9.67 on the upside. Big numbers. Evresco up 18 percentage points. Barnwell up 19.5. US Energy Corp up 20. Mexico Energy up 29. And Tenseco Gas up 77.1%. They're only a $53.9 million market cap company, so it'll be very interesting what's going on with there. Stu, internationally, big day today. What happened?
I'll tell you what. Hey, a couple things. Short-term bear on me on oil, a long-term bull. I'm going to go through a little bit of this right now.
Okay, okay.
First story out of the block, we got OPEC. And when you take a look at OPEC, if you take a look at this chart on our beautiful graphics there, you'll see that Russia is the number one overproducing on their quotas. So you have Russia and Iraq as two items. Then you have Saudi Arabia that gave up all of that. Well, the minister comes up and says, I think in March the agreement will be that output will remain the same level, the minister told reporters in Baghdad today. Here's the problem, and that is they still don't know what Iraq, Iran, and everyone else is producing because they're going around. So
and this is and I don't mean to spoil alert tomorrow, Stu. You happen to be on a webinar that starts when? When's the webinar?
It is 12:30, and that will be in the show notes. 12:30 Central.
You need to make sure on that webinar you pound the table for this point that oil. One of the biggest bear cases for oil is the OPEC compliance issue. You've been on it for weeks, months. You got to pound this in the table. Don't let them off the hook tomorrow.
Oh no, but here's the thing, and that is Jay and Ryan, everybody. We're going to have a great discussion, and sign up for that conference tomorrow. It's in the show notes. Now, here's the flip side of this. Okay, you remember Saudi Aramco? They're saying that BP and everybody else is getting out of oil, right? And then Saudi Aramco is also doing both. They're doing green and oil. Well, here's our buddies at Total, or is it Total Energy, right?
Thank you. Good. That's the safe. It's their safe name.
Oh, their safe name. Okay. Here it is. Here's a quote from Hele Christofferson, President of Strategy and Innovation at Total. There's a risk of a supply crunch in the midterm coming up because there is 10 million barrels per day supply gap in 2025. So we're seeing out of both sides of it, and you and I called it, that there is going to be people exiting. Now, here's the third article today, and it is Russia. Old Putin's over here saying, hey, wait a minute. If Biden's going to shut down the US Shale, I will produce everything that you want.
He's great. So he's great for Mother Russia.
Good for Mother Russia. Since it's 30% of his GDP, he will produce. So he has already said that he wants to take out our great US shale. Here's the problem. If he does, it is a national security issue. That's how we got to $20 a barrel before.
What's interesting is he's competing to take out U.S. oil with U.S. oil CEOs. So it's just a real interesting.
Oh, I don't understand it, but then again, we're just podcast hosts, so.
Yeah, you can say that again. Anything else on the international news desk for the day, Stu?
Oh, there's a lot, but I think we tried to confuse everybody. Bear bull.
Hey, we like it. Please check out that webinar tomorrow with Stu, 12:30. The link is in the show notes. All of these stories, guys, courtesy of the world's greatest website, EnergyNewsBeat.com. I teased crude oil inventories in my pricing discussion. As I mentioned, we're down 6.8 million barrel draw from commercial crude stocks. Great number. Domestic production raised about 100,000 barrels. Here's the key, though. Refinery utilization dropped or raised 7/10 of a percentage point, which is good. We hear, and especially on the East Coast, that's where we need to see the pad increase. It's where we saw utilization. We spiked 600, or 0.6 of a percentage point on that. East Coast is where, and really the West Coast, talk about our pad 1 and pad 5. Those are where seeing the increases in refinery utilization is great in terms of how some of these midstream differentials are trading. So if you're trading different blends all throughout the U.S., watch these splits, guys, because something trading on the East Coast ain't going to be the same as something on the right coast. Let's do earnings first. DCP Midstream, another nice limited partnership. So some of these numbers are going to be a little different. To give you an idea, they drop earnings today. They're up, what is it? They're basically down about 0.5%. down about a half a percentage point. No, they're not. They weren't down a half percent. I'm looking at the wrong thing. They're up 1.6 percentage points. I was thinking that. Well, sometimes the charts don't update from I guess at 9 computers running here. But remember, guys, these are a limited partnership. So when you talk about net cash and all this stuff, this is income attributable to the partners. So for fourth quarter 2020, which ends December 31st, GCP generated net income attributable to partners. So this is a loss of about 86 million, and they lost about 306 million over the full year. Net cash provided by operating activities to investors, 308 million, and adjusted EBITDA of about 280 million. They generated 85 million in quarter four and 235 over the full year of excess free cash flow, and they fully funded 81 million and 406 million dollars of distributions to their limited partners. As always, we don't like limited partnerships unless you are a limited partner. Then we love them because they're extremely profitable. Toyota, if you guys remember this, 2 years ago, Toyota ceased all production. Excuse me, not 2 years ago, 7 years ago, Toyota completely ceased production of its all-electric vehicle, of its best-selling RAV4 sport utility. Well, guys, guess what today? Headline reads, Toyota makes course correction in U.S. with plan to sell EVs. They're going to begin to sell battery-powered vehicles in the U.S. this year, revising their old wait-and-see approach. The Japanese automaker also said today that it's going to start selling these unnamed EVs and unspecified plug hybrid models, adding to the lineup of gas-electric hybrids that clearly account for about 1/5 of the total U.S. deliveries. They're calling it the Mariah. It's this limited number of a fuel-soured sedan, but their U.S. executives say that they haven't really had enough demand for this fuel-soured pill to roll it out. Give you guys an idea. EVs represent about 1.9% of the current U.S. passenger sales in 2020, but they expect to see that rise to 20% by the year 2026. So taking a little slice out of that, I'll push back on that 20% by 5 years. Like, trust me, I'll get abs by that point, and might as well.
I'll get
Toyota
hair.
came out. What'd you say?
I'll get hair.
Well, that won't happen. Toyota also said that 25% of its new vehicle sales they're hoping to be electric in 2025, but it added that share will rise to 70 by 2030. Woof. All right, I saved the best for last, folks, because as I mentioned that Putin is also competing with US Shale executives to put shale out of business. Equinor doing its level-headed best to stay up to date. Today, Equinor has agreed to sell its US Bakken shale assets for $900 million to a NCAP-backed private equity company called Grayson Mill Energy for around $900 million. To give you guys an idea, after exiting the Bakken, Equinor first entered it in 2011 by acquiring Brigham Exploration Company for a whopping $4.7 billion. And remember, this also follows its operating Eagle Ford asset sales of $325 million to Repsol in November of 2019. And this is what makes me laugh, Stu. Between 2007 and 2019. Yep. You ready? You sitting down? Guys, if you're listening to this, I'd sit down because this is job security as its finest. Between 2007 and 2019, Ecuador recorded an accounting loss of $21.5 billion on its overall U.S. activities, including $9.2 billion of impairments for its onshore shale and other assets, a company commissioned report by PricewaterhouseCoopers has shown. Woof, woof, and woof.
I guarantee you the executives still made their bucks.
Exactly, and that company commission report, they paid about $5 million to PricewaterhouseCoopers to do that. So if you were able to swipe out some of that loss, you might be able to bring that number down, $19 billion. I read a number today, Stu, Chesapeake Energy, $112 million on advisors and restructuring fees as they came out of bankruptcy. $120 million. I got into the wrong business.
We did. We can still get in there. I mean, you got to get your master's and your law degree and everything else, but we can do it.
Yeah, we could do that. We could do that, or we could also just continue just to make fun of them on the airwaves. So I think we'll just go ahead and do that. We missed anything today, Stu? It was a long day for us, but I'm ready to get out of here. We miss anything?
No, we're going to have a great day tomorrow, and we got to say hi to Jay and the whole team, and it'll be in the show notes. We're going to get that bad dog out.
Yeah, another shameless plug. Stu, you better teach him right.
I'll be lucky to survive with those experts.
No, it'll be a great webinar, guys. And with that, we're going to get out of here. Let you guys get back to work. Well, hopefully you're not working. Hopefully your day is over with. You can now have some dinner, enjoy some time with your family. As Stu says, smoke them if you got them. For Stuart Turley, I'm Michael Tanner. We will see you guys tomorrow on the Energy Beat.